say an elephant never forgets, right? But can a dragon learn new tricks? It really seems like Alibaba is trying exactly that, looking to, well, swap its e-commerce crown for maybe an AI-powered jetpack. The big question for us today, looking at the research, will it actually fly? Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today, using our research captured on September 17th, 2025, we're doing a deep dive into Alibaba, ticker symbol BABA.
Yeah, before we jump right into Alibaba, let's just quickly set the scene, the macro context. Pre-market futures are pretty flat. Wall Street seems, well, cautious. You've got these mixed economic signals, things like slowing U.S. growth projections. And the big thing everyone's waiting for later today is the Fed's interest rate decision. That always, puts a bit of a damper on things beforehand.
Okay, yeah, makes sense. So let's unpack Alibaba itself then. Because despite that market caution you mentioned, Alibaba has been on, well, an absolute tear, making what our research calls a full court press, really going all out into artificial intelligence. And here's where it gets really interesting based on the data. We're seeing moves like a major AI partnership with China Unicom. There's also investment in a robotaxi venture, and even a new AI-powered buy now, pay later service targeting U.S. businesses. And maybe the biggest news, founder Jack Ma is reportedly back involved, directly influencing AI strategy. That's quite something.
It is. And what's fascinating here is seeing how Wall Street is reacting. I mean, our research shows 40 out of 42 analysts rating buy a buy or strong buy. That's overwhelming. But, and this is a big but, there's a conflict. A fair value analysis based purely on free cash flow pegged the stock around $155.37.
Yeah.
And while the stock is now trading above that level after this recent surge.
Right. So the prices kind of outrun the fundamentals, at least based on that cash flow model.
Exactly. It suggests investors are really pricing in a lot of future AI success already. It creates this high-stakes situation.
Okay, so what does this mean for, the average investor, the crowd, and the big money? What's the sentiment look like?
Well, our research shows the options market sentiment is overwhelmingly positive. The put-to-call ratio is super low, just 0.37.
0.37. Wow. So that's almost 3 bullish bets for every single bearish one. That's extreme optimism.
It really is. And you look for the big money bears, the short sellers, they're almost nowhere to be seen. Only about 1.78% of the float is shorted.
So very few people are betting against it right now. Seems like the path of least resistance has definitely been upwards.
And if you connect that to the price action, the charts, our research confirms it. Both short-term and long-term trends are sharply higher. And crucially, it's backed by significant accumulation volume. So big players are buying in. It's not just drifting up. But this raises an important question, a point of caution, really. While momentum is clearly accelerating, the technical indicators are signaling an overbought condition.
Overbought. Okay, meaning it's gone up too fast, potentially.
Potentially, yes. It suggests this incredible pace might need a breather, maybe a pullback or some consolidation, and volatility is rising too. Now, that confirms the strength of the move, but it also warns you expect a bumpier ride ahead, perhaps.
Yeah. It's that classic situation, isn't it? The market loves the story, but maybe pushes it a bit too far, too quickly. So after sifting through all this data, what's the final verdict? Where does our analysis land?
Based on everything, our research points towards a cautiously bullish outlook for Alibaba right now.
Cautiously bullish. Okay.
Yeah, the main risks are pretty clear. That nervousness in the broader market we talked about, the stock's own overbought momentum, technically speaking, and the price running ahead of that fundamental fair value. But, the bullish case is just very compelling right now. You've got this powerful AI strategic shift, huge analyst support, and the technical trends are aligned, even if they are a bit stretched.
Got it. So for the next few trading sessions, what are the key levels people should be watching? The battleground, so to speak.
Right. The bulls really need to defend that $158 level. That was the key breakout area. Their next cut would likely be up around $171.
Okay, $158 hold, aiming for $171, and the downside.
A close below $155, that fair value number we mentioned, that would likely invalidate the immediate bullish thesis. It would signal a potential break in trend.
Makes sense. So need to watch those levels closely because remember, even these AI-powered jetpacks need to refuel eventually. Okay, that's all for this deep dive. Remember, this podcast is for informational purposes only and isn't financial advice. Always do your own research or consult with qualified financial advisors before making any investment decisions. Thanks so much for tuning in. Catch you in the next episode.